Live webinar with Admiral Markets. My name is Chris, and I'm going to take a look at the charts with you. Taking a look, of course, at the Forex market. We can take a look at CFDs, commodities, basically price action on the charts. Before we do that, though, two messages and disclaimers to discuss. The first one is the fact that this live webinar is shown to a global audience, but may not be suitable for everyone necessarily. Please visit admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity to find out if this webinar is suitable for you. Also, please note that trading for exchange on global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, thank you so much for your attention on that. As I said, the webinar is hosted by Admiral Markets. So if you want to know more about opening an account, maybe checking out our daily analysis, for instance, or if you're interested in platform, how you can trade with extra tools, you can check out Supreme Edition. All of that info is to be found at admiralmarkets.com. All right. And I'll show you some of these tools basically in this webinar. Let me take a look at the live charts right now. In fact, let me pull that over. Hopefully, yes, you should be seeing everything correctly now. Thank you, Angel. Good to see you here and everyone else. I'm doing pretty well. It is quite cold here, I think everywhere in Europe at this moment, but should be getting better, I guess, a few days from now. So until that moment, plenty of reasons to stay inside and look at the charts, I guess. One of those charts is the euro dollar, and I think is looking a little bit, well, still, we're getting a break, of course. I would not trade it to the downside, all right, because of the bigger support that I'm expecting around 122.50. So I would not trade this break. I know that there are some dollar bulls out there, but I think that the overall resistance level has not been broken yet, which is here. We're just getting a deeper retest. So I'm still a little bit on the cautious side. I can understand that probably some dollar bulls are already thinking that that's it and the dollar's going to go up. I'm still a little bit cautious because of the bigger support on the euro dollar and the bigger resistance on the dollar index. So that's my view of this breakout. I think price could still bounce here, but if it doesn't, and if it really pushes through 122, then of course, yes, price action in that case, if there's a strong daily candle breaking through that 122 level, then price action is indeed showing, strength, in this case, weakness, I should say. And yeah, then more downside is probably ready for, the euro dollar is probably ready for a downtrend, and more downside could be expected towards 120 and the long-term moving average. If, however, we see at the end of today a big wick at the bottom or tomorrow, and we see price kind of bouncing off the S1 maybe, or this trend line or 122, then I think it could still make a reversal, what I was expecting already, to the upside. What I was really looking for was a break above 123.50. That we didn't get as yet, but it could still happen if we bounce at 122. So that's my view on the euro dollar. We can move on. Angel, I think, would like to take a look at gold, probably. Knowing Angel is a big fan of gold. How was your weekend, by the way? Did everyone have a good weekend? Let me know in the chat box. You can, of course, reach out there as well for trading related questions as well. All right, so don't mind the cat in the background. I'm not sure if you hear that, but my cat disagrees with my euro dollar analysis. Alrighty. Pound dollar. Yes, it is being recorded, indeed. Edgar would like to, I guess, you want to hear the cat again? Just kidding. No, but it will be uploaded to YouTube channel of Admiral Markets. It might be tomorrow morning. So because that might be a little bit later than usual. That could be, from now on a little bit slower due to some internal changes. All right, so pound dollar is testing the basically triangle that we're looking at here, and I don't know if anyone saw my wave analysis. I already was indicating that this is probably going to be a ABC correction like this. That is indeed happening. More or less, I think that the wave C could be close to finishing around this zone. Hang on, let me go renew this template. Now I lose my lines, of course. Well, anyhow, you saw the lines already on the chart. And I think we have a pretty clear kind of trend lines. Let me just put those back on. There we go. I think it was a different. Was I using this trend line? Probably. I'm not sure. But anyhow, price is pretty close to that, or right at that support zone. And it's basically at Keltner, S1, weekly pivot point, previous bottom. So yeah, it'll be interesting to see if price bounces here or not. If it doesn't, there could be a break to the S2 and the S3. All right. Angel has already a bearish opinion on euro dollar and pound dollar. In my view, I'm leaning. I have a bullish bias, and I expect a bounce to the upside. So let's see. But indeed, I mean, of course, price action will ultimately let us know who the winner is. So I'm keeping an eye on 4-hour and daily candles to see who will win. But yeah, we have a little bit opposite bias at this moment. But I'm not. Yeah, basically. At this moment, we'll not trade the pound dollar. With the euro dollar, I'm hanging in for an upside, but not trading it to the downside for the moment, unless we get a daily breakout. For the pound dollar, it's the same. I would be interested maybe in I'm not trading the pound dollar, but if I would trade it, I would be looking for 4-hour break bounces or a daily candle breakout. So I would need to see a daily candle closing a bit lower near the S1. Yeah, that would probably, or preferably below the S1, but with a close near the low. Alrighty, so let's see. Edgar is asking about, I think it's okay to trade 4-hour charts. Well, maybe it's better to wait for the daily candle. If this daily candle has a big wick, maybe half of the candle is a wick at the bottom, we can look at the 4-hour chart, I think. And then price would probably have done this. Can wait for a little bit of a hook back, and I think there's a good chance of a bounce. Alternatively, I'm not going to trade the 4-hour. I'm not going to trade the pound dollar personally. I rather focus on the euro dollar for the moment. Just to give you a heads up on that. But another alternative could be to wait for a 4-hour candlestick pattern that looks bullish for a bounce. Alternatively, as I already indicated, a bearish daily candle closing at the S1 or just below it, near the low, would be good for a breakout, because in that case, the daily candle is probably going to break through the S1. So a bit of a hook back, maybe halfway that candle or to the 38, and there's a good chance of a downside towards S2 and S3. So typically, the best is to judge which time frame would signal what time frame could be used for trading the break or bounce, and that depends, what time frames you look at. Of course, in this particular case, daily or 4-hour charts make sense, and then wait for a bounce or break. which one we trade depends on our larger analysis. Or we can wait for a break of the break or a break after the bounce and keep an eye on the 1 hour chart, lower time frames, for instance. So on the daily chart, we see a good candle close, right? So it looks bearish. And 1 hour chart, we see a flag. So a break of that flag, for instance, could be a intraday setup. Or price makes an upside, a bull flag, and we see on the hourly chart a break of the bull flag. That could be one way of trading the bounce. So you can also zoom in and trade, lower time frame patterns after the bounce or break. Dollar yen is looking like we're going to get an ABC zigzag. I myself moved my stop loss of my dollar yen short to above these highs. I'm out of that trade now at this moment, as I thought that if price breaks through these resistance levels, there is a chance that it could do this. I was looking for downside because to me this was downtrend pullback and there was a good chance of continuation. But that continuation, although it did move a little bit, never moved far enough for my trade to end with a profit. But it didn't end up. It just ended up with a small loss because of the trail stop loss I used, and I used that because price started to move choppily here. So either it continues, that's great, or not, then there is that risk of a bigger zigzag like this. So that's exactly why I used the trail stop loss to get out of that trade, because if price does break to the upside, then I don't think bears are in control. I think bulls are wrestling back control with regard to price action. So from that point of view, best to exit and just kind of reevaluate and reanalyze, I think. I was quite patient with the setup. I stayed in all of these candles, so I think it's okay. And I think from a wave perspective, it's just there was a pretty decent momentum here. So this could easily be a pullback for a C wave, or maybe totally something else. Maybe even a wave 3. Maybe this was the end of the downtrend, right? So shorting up in here made sense because this was still the dominant factor, the dominant price action. But if you then see new information coming in that doesn't confirm, doesn't go in the same kind of movement and looks corrective, then that's a warning signal that things might be changing, right? The environment might be flipping and turning. So that could be happening on the dollar yen. I know that Nenet was actually looking for long setups in here, and that's working well, in fact. So, but he's looking at it more from an intraday perspective. All right. Aussie made a 3-wave correction and is now breaking support as well. And yeah, maybe, those that had the bias to the upside, maybe it's going to be right. Let's see how price responds. This is the very last kind of area, R1, in the previous top. So for the bears, the dollar bears, like myself, this is the very last kind of line of defense before indeed the bullish breakout would become the prevalent kind of direction. And if it does turn, if today by any chance is a big wick at the top, then the bears might still see price make that one more lower low that I'm looking for, basically the last lower low, before a dollar trend I think will begin. I do think that the dollar trend uptrend is likely. It's just a question of when, I think, in my view. But ultimately, some dollar retracement, some dollar upside, I think, is going to happen, as I think that this is correct, finishing a 5-wave like this. So I think we might see an ABC correction. Aussie is following that for the moment. but Aussie is also a little bit of a tricky pair. I'm going to wait for today's daily candle probably. I still don't think it makes sense to trade this because of this daily trend line. So if today's daily candle closes near the low, then that is a likely, there's a good chance that price will break through that trend line tomorrow or later this week, because when you have price action at support or resistance, that when a candle closes that close to the low, that signals pressure, and often that pressure translates into a breakout on average. All right, so let me adjust this channel a little bit. New Zealand dollar pretty much doing the same thing. Reaching the 78.6 fib though, so that could be a bounce spot right here. Let's see. However, the dollar is, definitely into a bullish sentiment at this moment. So this is a highly reversal trade idea. I'm not sure if that's too good at this moment. I think probably better to keep an eye because of the bearish or bullishness on the dollar generally. It's a bit difficult to jump in dollar strength at this moment, right? If you traded this breakout, for instance, on the pound dollar, you're doing well. And it could be good to think about either trill stopping it, moving to break even, maybe taking some profit here, or taking entire profit here, or part profit. That management, you got to think about yourself. But jumping in dollar strength here is, I don't think, a good idea right now, because it's literally right at resistance. It's right in this case with the pound dollar resistance. At this case, pound dollar support. So it might break, and but it's not worth trading here. It's better to let it break and then think about trades into that direction. But if you followed the wave analysis this morning and you did take this breakout by any chance here, for instance, of this weekly pivot point, then it's okay. Then you're in that trade and you're locking in profit or you're closing profit, etc. But now I don't think it's a good spot. Is it a good spot to trade reversals, right, against the dollar strength because price is at support? Maybe, but hold on, because the candles are looking so bearish at this moment that we don't, from my point of view, have any price action to confirm that. I would rather wait for price to confirm a bounce, which means I would definitely need to see some bullish candles here showing a turnaround. All right, and this candle is still open. This 4-hour candle is still open for another 2 hours and 10 minutes, 11 minutes. So we'll have to see if there's going to be a bounce with this 4-hour candle, or maybe the next, or maybe the one after, or will there be a breakout? So that's also valid for the Kiwi as well. Same thing, and the dollar CAD. All of course have dollars, so it's logical, right? So that's the dollar story situation. I think from this point of view, I'm just waiting on the sidelines for more info. Now, question could be like, okay, if we get a dollar break or bounce, which one could be better? Is it better the Aussie, the Kiwi, the Euro, the Pound? And we can analyze these crosses to see which is relatively stronger. The Euro versus the odd, is the Euro or the Aussie stronger, or are they equal to each other? So at this moment, I would say the Euro is still in the upper hand a little bit, because ultimately this is a sideways movement. And prior to that, we had bullishness. So I think that typically you have momentum, correction, momentum. All right, so I favor the Euro here. Euro New Zealand, it's a close one. This is because it is making upside, but then again, yeah, it also broke above this resistance trend line. So probably looks more bullish, but all in all, quite choppy. Pound odd is ultimately still more in a bullish structure, I would say, and probably pound New Zealand too. So let's take a look at euro pound mixture. So pound dollar or euro dollar are more likely to bounce, I would say, although all of them can break. But if they bounce, then euro dollar, pound dollar will bounce probably more. If dollar breaks with strength, then it seems like to me that Aussie and Kiwi might fall further when looking at these crosses, to me at least. Although all of them are looking quite, you know, I mean, they are relatively, yeah, it's not a fantastic uptrend or you know what I mean, not fantastic trending environments, but yeah, probably the Aussie could be the weakest one, I guess. Let's take a look at the New Zealand. New Zealand is in a downtrend, although at the moment price is making an upside retracement. Yeah, from a swing trade perspective, it is a bit of a tougher week, and that can happen sometimes with swing 4 hours charts that are good for swing analysis. Intraday trading is a little bit less vulnerable to that, but of course needs more monitoring. So there are pros and cons. I see some questions. What is the best way to trade this pattern waiting for bounce? We already answered that one, I think. Can you combine chart patterns with an oscillator? Chart pattern. I guess so. I mean, a zigzag pattern, for instance, right? That would, if you have a zigzag like this and you have divergence, that could indicate weakness. Let's see. Well, typically, if you have a flag, oscillator is going to go just oscillate with it in a way, if you see what I mean. So, I mean, you could use it. You could still use it for turns and kind of like how do you say it? The extremes, like reaching oversold and overbought, right? But yeah, it's not something that typically I just use it for divergence, to be honest, myself. But I can imagine that would make sense. Nasdaq, let's take a look. And gold as well. Gold, yeah, gold is falling a lot. Finally, as expected, although we had a little bit of a bounce first. Let's take a look at Nasdaq. Now would not seem like a good moment to me. It's right at the previous top. There was indeed here a good correction. I think we just talked about that, right? That made sense, but it is previous top is always a big level to think about. Always a strong level. Retracement would seem like a normal thing to expect here. Back to these fibs. If it makes specifically if it's corrective like this, I mean, if it starts to fly down like that, then it would be good to be cautious, because in that case, and specifically if it bounces with the correction, that could indicate a bigger correction and a double top potential. All right, so let's take a look at the DAX. There we go. No, that's here. That is still remaining in a corrective kind of 50 fib environment, way different than the Nasdaq, which is all the way at the double top. Pretty big difference there. But so here, this is looking way more corrective, right? Momentum correction. I still think that the triangle is the most likely pattern, as you can see. But for a triangle to be likely, it would have to move up a little bit higher typically. Let's see if that happens. Otherwise, if it stays this low, it is looking more like a correction with momentum prior to that. That could perhaps indicate a bigger correction down the road. Pound yen. Yes, let's take a look at that. All right, ultimately, I think it's really important zone right now, right? Because you got the previous tops and you got the previous bottoms, and price is right at that level. Plus, we have this trend line. Price is right at that spot, right? So if it breaks below it, it would be breaking kind of a rising wedge pattern. In that case, there could be some good downside to come. Now, considering, pound dollar and dollar yen are also at key decision zones, it's a little bit difficult to what we could expect from the long term. But generally speaking, this is, important zone, I would say. But price is respecting this zone. We had a pin bar, price is going sideways, doesn't, respecting the support zone. Many days already like this. So ultimately, it looks like that there's a good chance of a bounce, I would say. I would only change that if we have a clear daily candle breaking through that with a close near the low. That would change things. If we have a candle like that, even if it doesn't go fully through the S2, a bearish candle like that shows a lot of volatility momentum, and I would say a continuation lower is likely. At the very minimum, I would say a break below S1 and the previous bottom. But until that happens, I think until such a bearish candle is visible, I think that a bounce is slightly more likely, but that itself is risky because price has gone sideways. So the bounce is not really looking that strong either, although it for the moment seems more likely to me. But to trade it, I think it might be better to look at the 4-hour chart and wait for a breakout, probably above the weekly pivot point and this trend line. And that could indicate a bigger breakout to the upside. There's also a potential for price to break through support, which it actually almost did or was about to do, depending on how you draw that trend line, I guess. All right. And that breakout on the 4-hour chart is not interesting to me because bigger support is really around the corner. So the bearish breakout, I would really only trade with a very good, after we see a very good breakout candle piercing through at least the previous bottom. The bounce looks better, but inactive price action is not really making it attractive, I think, to trade now. That reversal trade idea could, I think, make more sense if there's a breakout to the upside. Still a little bit risky, but there's some, potential there. I would like to see price move up quickly. If it takes too long, then cutting the trade short, I think, could be good because ultimately we got to keep an eye on the fact that although price is at strong support, there is strong momentum and sideways zone as well. That's always a little bit a factor to keep an eye on as well. So this bullish breakout, I would like to see it move to R1 fast, then a flag, and then a continuation to R2. That's my 2 cents, at least for the moment. My thoughts, my roadmap. Do you have any other preferences with regard to Forex or other instruments? Of course, CFDs maybe. Don't forget, Other Markets has a lot of instruments to review, or I mean, you could potentially trade. That's what I meant. And to find out more about that, you can just go to right here, products, and you can see indeed not only Forex, but commodities, indices, CFDs. Uh, 1280 target for golds. Why do you have 1280? What's the reason for 1280? Is it the historical level, or is it a fib, or is it this S3? This S3 weekly point is actually 12. No, it's 1285. Ah, it's monthly Camarella L5. Okay. Interesting. Well, of course, if it's a monthly, then I guess on Thursday there will be new levels, right? As we'll have a new month. It'll be interesting to see what those levels are then. I mean, from trendline perspective, I would say that S2 is probably around 1300 is the next target. After that, I would say, and these weekly pivot points will also change next week, of course, but I would say probably 1285, the S3, and then maybe all the way down to this trend line, 1260. I mean, I'm sure there's some support levels along the way as well, but ultimately, then maybe this zone down at 1150. Yeah, that's something that we got to be aware of as well. Tomorrow is the last day of the month, so that's always a little bit different trading, and sometimes reversals kind of appear quicker than usual because of some profit taking before March starts. But let's see if it's how much impact it has. Of course, on Thursday it's going to be interesting because we got a lot of new monthly candles, and that gives a lot of good info about direction and price action as well. So that's always very, very useful. All right, folks, I don't see any other preferences, so that's about it for the moment. Wish you all great trading. We hope to see you tomorrow in the webinars again, education, Forex and CFD webinars with Ninit and myself. And of course, you can take a look at a lot more. You can also take a look at Supreme Edition to be able to trade with those tools I just showed, such as Keltner channel and the pivot point indicator, mini terminal, etc. Don't forget to check that out, and feel free to click on Start Trading for an account to set up an account. All right. In any case, wish you again good trading and see y'all soon. Cheers.